Hello, my pupils. The now presentation of the question that I gave you yesterday. It was a school living examination, school certificate examination for 2017 depreciation. Question 2C carrying 8 marks. It read as follows. Mlenga maintained his motor vehicles account at cost price and a provision for depreciation of motor vehicles account. At 1st January 2014, the motor vehicles account had cost value of 120,000 kwacha, while the provision of motor vehicles account had a balance of 24,000 kwacha. His policy was to depreciate the motor vehicle at 20% of cost per annum, charge 4 years depreciation in the year of purchase, and charge no depreciation in the year of disposal. On 31st March 2015, Mlenga acquired another vehicle from Tata Motors Limited at 40,000 kwacha. On 30th September 2016, Mlenga sold one old vehicle which cost him 35,000 kwacha in 2014 at 19,000 kwacha to Zionele traders on credit. Required, open the provision for depreciation of motor vehicles account for 3 years, 8 marks. Now, this was free 8 marks. I want to encourage you girls, there's nothing difficult here. Let's analyze the question together. Now, look at this. At January 2014, the motor vehicle account, motor vehicles, so many motor vehicles account had cost value of 120. What does this mean? It means that this account was already in existence and it had a balance of 120,000 kwacha brought from the previous year 2013 to 2014. While the provision for a motor vehicle account had a balance also of 24,000 kwacha. We have identified two opening balances here. An account opens with a balance if it is already in existence. Now, if you refer to what I was explaining yesterday on the methods of calculating depreciation and methods of charging depreciation, this has been captured in this question. This question is very comprehensive. If you check, his policy was to depreciate the motor vehicle at 20% of cost. Not on net book value, but 20% of cost. What does this mean? It means that you are using the straight line method and not reducing balance method, because reducing balance method is calculated on the net book value. Charge 4 years depreciation. Remember, when you charge a 4 years depreciation, it means in the year of sale or disposal, there's no charge of depreciation. So the method of charging is 4 years depreciation, which goes with no depreciation in the year of disposal. On 31st March 2015, Mlenga acquired another vehicle. So, 31st March the following year, another vehicle was acquired. It was bought when we say it was acquired from Tata Motors at 40,000 kwacha. So, the cost of the new vehicle is 40,000 kwacha. Then we are told Mlenga sold one old vehicle which cost him 35,000 kwacha in 2014. So, it was included in this one. There was this vehicle cost 35,000 kwacha. It was sold at 19,000 kwacha on credit. Okay. So we are going to open now the provision for depreciation of motor vehicle account, having analyzed. We are still looking at the 2017 school living exams question 2C on depreciation. Now, I want you to have a clear understanding. The question requires us to prepare the provision for depreciation account, but I would want us to start with the motor vehicles account so that we have a clear understanding. So motor vehicles account, let it be part of our work. 2014 January 1, the balance in the motor vehicles account is 120,000 kwacha. That is what we are told from our question. And then 31st December, up to 31st December, nothing happened. So we close our books with 125,000 kwacha. We balance our account. The side that is less, the credit side, there's nothing there. So we take our balance carry down so that we have the totals of 120 on both sides. We open 2015 January 1 with balance brought down from the previous year of 120,000 kwacha. And then March 31st, a new motor vehicle was acquired, whose cost is 40,000 kwacha. We are not told exactly from the question whether it was by cash or bank. When that happens, we write in the details cash. Meaning the value of our motor vehicles has increased by 40,000 kwacha to now 160,000 kwacha. So we balance our account, take the 160,000 on the credit to balance up our account, and we're going to have 160,000 on both sides. 2016, we bring down a balance of 160,000 kwacha, meaning that the 2015 ended with 160,000 kwacha value of motor vehicles. 2016, some issues happened here. September 30th, there's a name of Zionele traders in the details here, meaning we sold a vehicle on credit to Zionele traders for 35,000 kwacha. Now, this 35,000 kwacha is the original cost of the vehicle. When we dispose a vehicle, we write the original cost of the vehicle and enter on the credit side to less the asset account that has a debit balance. A reduction in an asset account should be entered on the credit side, hence the 35,000 kwacha on the credit. If you so wish, you can put in brackets here disposal. And then we balance our account. We have remained with 125,000, which is balance carried down on the side that is less. This should give us a debit balance of 25,000, sorry, that has now remained in our motor vehicles account. So the value of our motor vehicles account after the disposal of the old motor vehicle for whose cost was 35,000 kwacha brings us down to 125,000 kwacha. Thank you very much. This is how the motor vehicles account should appear. This will help us to determine the depreciation for the 3 years that we are required to determine depreciation. As you can see, I have indicated the costs per year in red color. So we have 120,000 kwacha for year 1. This balance is brought down from 2014. So 2014 we closed at 120,000 kwacha. 2015 we closed at 160,000 kwacha. This is brought down from 2015. 2016 we closed at 125,000 kwacha. This balance brought down from 2016. Thank you very much. Next, let us now discuss the provision for motor vehicles depreciation account. How will it appear? So we're going to have in the first year, January 1. We're supposed to have 1 here. The balance brought down of 24,000 kwacha. In the question, we are told that the provision for depreciation had a balance of 24,000 kwacha. We are indicating it on the credit side because provision for depreciation account has a credit balance. At the end of the year, we charge depreciation at 20% straight line on the cost, and this should again give us 24,000 kwacha in year 1. We balance off our account. In 2015, we bring down a balance of 48,000 kwacha, and then at the end of the year, we are going to charge depreciation. This time around, instead of calculating 20% on 120,000 kwacha, it will be 160,000 kwacha. Mind you, there's another motor vehicle that was procured somewhere in March, costing whose original cost is 40,000 kwacha. So now this time it will be 20% of 160,000 kwacha, which should give us a total depreciation of 32,000 kwacha. That is in the second year. Let's move to the third year. We balance up our account. Then we go to the third year. 2016, there are some issues here. We bring down the balance of 80,000 kwacha, and then this is when we disposed an old motor vehicle that was bought in 2014 at a cost of 35,000 kwacha. Now we need to add all its accrued depreciation and remove from our provision for depreciation account. Now to eliminate the accrued depreciation in this account, we need to enter on the debit because this account has a credit balance. So a reduction here would mean debiting it. Now look at the disposal here. We have 7,000 plus 7,000. How did we arrive at 7,000 plus 7,000? So in year 1, this asset, it was procured in 2014. It means that the 20% of 35,000 in the first year, it is this 7,000. And then in the second year, 2015, the 20% of 35,000, it is this 7,000 kwacha. In the year of disposal, according to our policy, we are not supposed to charge any depreciation. So we've charged for 2014, 7,000, and 2015, 7,000 to give us 14,000 kwacha. Now that we have disposed an asset whose cost was 35,000 kwacha, we no longer have 160,000 kwacha as the total value for our motor vehicles. It will now reduce to 125,000 kwacha, 160,000 minus the disposed motor vehicle. So our calculation will now be 20% of 125,000 kwacha to give us 25,000 kwacha depreciation for 2016. So we're going to balance off our account, and this continues. As we move on, we can see that the balancing figure is on the debit side, 91,000 kwacha. We're going to continue in this manner, giving us totals of 105,000 kwacha on both sides, and we bring down a balance of 91,000 kwacha. We close for 2016. That is the end of our provision for depreciation account. Thank you so much. I would urge you to replay this video time and again so that you get the understanding from my explanation. Thank you very much.